Greetings. Welcome to my weekend market recap 25th November 2023. I'm Sagar Nandi, retired IT professional swing trading stocks in the USA and India markets using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live stock and market analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these channels are open to the public. You are most welcome to make use of them. And here I tend to share truly high probability trading ideas by combining the technical setups with market, sector, industry, fundamental, and sometimes even seasonality analysis. Disclaimer: this demonstration is for educational purposes only. I'm not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems and only the Q systems for my trading. All the Q components run on Metastock platform and the technical analysis component runs on TradeStation as well. That was the last slide. Let's continue with a look at the market using live systems. First, a look at dollar index. Earlier, price was inside a range for dollar index. While it was inside a range, as I explained in the previous market recap also, it displayed a big move down 3 very high bearish momentum. That was showing that it was getting ready to fall down. However, we would not be bearish on US dollar until this trend line support was broken, and it was broken on this day. That was a sharp drop. In fact, I checked, that was a sharp drop. Then price tried to go up, went up to the lower end of the extended trend line support that was broken and fell again. So this move up happened to be a dead cat bounce. And in fact, right when price was here, I mentioned that it might end up being a dead cat bounce. You may look at the YouTube video of that week. It fell down heavily again on this candle. In fact, this drop was almost 1.5% drop. That is a huge drop for US dollar index. And since then, price is continuing to come down. It is at the lower boundary. However, the weekly is looking quite bearish and the next support line is far away. What is my outlook of US dollar? I think even if it tries to go up, and this is the exact analysis I shared in the previous market recap also, even if it tries to go up, it will hit so many resistances from the three direction lines, and even more importantly, a trend line resistance. I am thinking that it is more likely dollar index will continue to fall, either continue to fall from Friday's close, or even if it tries to go up, it will fall again. If that is so, then that may help the stock market in the USA. We'll look at that, but before that, let's have a look at the global markets. starting with All Ordinaries Index of Australia. Australian Index All Ordinaries. What is the direction? Whenever I'm looking at any instrument, as you may know already, I try to answer two questions. One is, what is the direction of the market of the instrument? And then what is my preferred trading direction? What is the direction? It is not in an uptrend. If we look at this area or this area, or maybe even a wider area, we see that it is inside a box. If we consider a longer term box, then it is in the middle of the box. But for shorter term, we have a watermark resistance here and we have a bearish headwind coming here. Right at the watermark resistance, which created a false upside breakout. After the false upside breakout, you see that the traffic light color changed from green to yellow, and then on Thursday it changed to bearish red. On Friday it is maintaining the red color. The support watermark levels are far away. If we look at the weekly chart, 1 week ago we had an indecisive candle after price tried to recover in an overall downtrend. Indecisive candle is now followed by a bearish shape candle, a narrow body but solid body candle. It's a bearish shape candle, has an upper tail as well. Weekly seems to be stalling after this recovery attempt in a downtrend, and right at that time we had a bearish headwind almost at the very top of the swing up move, and price is reversing from the watermark resistance with red candles. So that was the Q analysis, and let me now answer the two questions that I asked about any instrument. What is the direction? Sideways. What is my preferred trading direction? Bearish. That is why I look at the global markets, not that I am trading in Australia or Hong Kong or China, but to practice more and more reading the charts using these unambiguous Q signals. And some of you may be trading in these markets, like I trade in the Indian market too. That was a look at the Australian market. The exact analysis is applied to the USA market as well. Let's look at the next global market, Japanese market topics. The same two questions. What is the direction? To me, it is also moving sideways inside a box created by watermark resistance at the top, watermark support and trendline support at the bottom. Interestingly, once again you see the beauty of the unique headwind reversal signal, and I use it all the time in making trading decisions in terms of preferred trading direction. The bearish headwind came right at the very top, not only in the daily chart but also in the weekly chart. At minimum, you might protect profit in long positions that you were carrying, and if we had proper Q short setup, we would also short for swing trading at this point. One approach is to apply the checklist conditions of headwind trade setup, not the signal only, but setup that relies on the signal but has other checklist conditions. If we had the headwind setup, we would short right on this day. And as I always say, if the headwind signal did not confirm a setup, look for the first bearish flow after the bearish headwind and short there if you find a low risk shorting opportunity. Low risk means stop loss is not far away, and that would be applicable on this day. So we would certainly short, I would certainly short on this day. Now let's be rigid with our analysis. We had a bearish flow on this day also indicated by the tick, but I am not saying I would short there. Why? Because that candle shape was not bearish, the candle shape was bullish. So I am always looking to short when I have a bearish signal and or setup, but I need a bearish candle shape, which was true on this day. And this requirement of a bearish candle shape for a bearish trade is valid for all the Q short setups. And similarly, we have a requirement for long setups that the candle shape has to be bullish. So that is how, once again, you could short either right at the very top or once the bearish flow came after the bearish headwind. And now it is moving inside a range. It's closer to the upper edge of the range where we had already a bear release signal. Price recovered in the weekly from this point and now it is stalling with a doji candle this week. Direction sideways, and my preferred direction for trading is actually downward provided it continues to, or rather it starts to go down next week. On the other hand, if it goes up, I will not be able to buy because the low risk entry point would be here using the bullish flow setup. I would happily buy on this day, but if it goes up from here, I am not so happy to buy because my stop loss level will be far away. And that is probably one way my analysis is somewhat different. Not only my analysis, my YouTube videos also, because I never like to share ideas where the stock already has moved up. That is where the stop loss is far away. While I see many other people do that, they sometimes do that in my WhatsApp group also in India. I try to discourage, but I think that is not the low risk approach to buy at this point. This point using a flow long setup was the low risk buying approach. That was a look at Australia and Japan. Let's look at China market, CSI 300 index. This is not sideways, clearly moving downward. I mentioned in the previous market recaps also, it was continuing to move downward. Direction downward, my preferred trading direction, also bearish. There is no bullish signal at all. Not oversold as well. Next, UK market, FTSE index, sideways again. So three of the four markets we are seeing so far are moving sideways. This is right in the middle. It's unlike Australia and Japanese market, right in the middle of the sideways move. That's a no trading area. So I have no preferred trading direction for this one. Here I'll stand aside. And lastly, India's Nifty 50. Well, this is also inside a sideways range and at the upper edge of the range. So direction sideways, my preferred trading direction is actually bearish. That is the market level analysis. Of course, when the when and if the Nifty 50 comes down, some industries or some sectors may go against the market. Those sectors, industries may start to go up. Then I don't mind looking at those sectors, industries actually, they are more detailed, more granular using Q Edge. I'll be happy to buy them if I find low risk buying opportunities in good fundamental stocks as per Q Vital scorecard, in strong industries as per Q Edge scorecard. That is a separate thing. That can I buy stocks when the market is coming down? Yes, if some industry is moving opposite to the market. Like sometimes the defensive sectors, industries in those sectors may do better. They may even go up better relatively to other sectors, and some industries may actually go up when the market comes down. Which one? I'll find that out in real time using Q Edge. I don't want to decide beforehand. But it is possible that defensive sectors or gold mining industry will go up slightly, but will they go up? I'll find that out in Q Edge and decide to trade in the long direction in those sectors if they go up, if the market comes down in India. For the market, I'm not going to buy now. Even if it goes up, for the market as a whole, I am not going to buy. Well, let me take that back. Let me spend a few more moments on this chart. For the other global indexes where it was moving sideways, I did not think that I was going to buy because they were at the upper edge of the sideways range and the recent swing low was far away. But here Nifty 50 is little bit different and somewhat similar in the way that it is at the upper edge of the range. That is clear. But what is different is that while being at the upper edge, it is moving inside a squeeze for more than a week. Price is almost not moving anywhere. And because it is moving inside a squeeze like that, we could even look at the 3 chart template. Well, I came to the 3 chart template to see if there is any squeeze. In the recent period, there is no squeeze as per the momentum chart. So let's close that. However, there is a volatility squeeze shown in the Q chart. Price is compressed. So in this case, unlike in the other few global markets that we saw were also moving sideways, if it breaks to the upside, I'm able to buy the market with a stop loss just below this narrow range, maybe below some of these direction lines. I don't have to put stop so far below like here, certainly not here. So because it is moving out of a squeeze, it is possible to buy when it is breaking out without a wide stop. That is a distinction, and that's the value of probably looking at global markets and different instruments to learn the techniques, and then you may apply the techniques to any market. In fact, there are several buying opportunities in the Indian market, and I bought one stock, in fact at least one on Friday, and the stock I bought on Friday was actually suggested by one of the Q traders in our WhatsApp chat. But if somebody suggests me a stock, I always look at it myself, and I also suggest the same to others. If I suggest a stock, you may look at it yourself using your systems and techniques. Hopefully Q is a part of that, but even if Q is not a part of that, you may look at the stock using your systems and techniques and see what they are saying. This was the stock the gentleman shared, very smart guy. And of course, the smartness was not required as for using the Q systems. It gave a very clear breakout as well as a flow setup. price moved out of a squeeze. Weekly came to a support, went up with bull release and a sharp turnaround from red backdrop, magenta backdrop actually, magenta backdrop bearish to bullish without going through any yellow color. That was a sharp reversal at trend line support. I always mention few things consistently. One of them is that I buy only at low risk point. Another one, I always say, one of the strongest technical buy points come when a stock is at longer term support and breaking out of shorter term resistance. In this case, weekly long term support breaking out of daily trendline resistance. That is a clear buy. On top of that, it has the parent of all bullish momentum signals, big move 3. Very high volume. Did we miss anything reading on the chart? Probably yes, intentionally probably. For me, I know all the signals by heart. You may not know, so you may not know in the beginning, so no problem for that. We may open the commentary, which is a program in itself, and it says this stock DATP.NS, NS is for National Stock Exchange of India, as of Friday at the close has a breakout long setup as well as a trend following long setup, and this is why I came here. It is giving a bullish squeeze move pattern, very powerful pattern, along with a bullish fan out pattern. So patterns are something people like to have. It is part of somebody's trading style, and the setups are part of the Q systems. They tell us when to buy a stock precisely. So the commentary is showing that it is moving out of a squeeze, has a squeeze move, it has a fan out pattern also, it has breakout setup as well as flow set. That's a clear buy. That is what I mentioned, that in any market you may find buy setups. Whether you take it or not will depend on few things, at least for me. One is of course what is my preferred trading direction at the market level. In India market it is moving sideways, and there is some reason I'm thinking it may go up. You saw that Nifty 50 was moving in a very narrow range. What did this stock do? It was also moving inside a narrow range but broke out first. A stock that breaks out before the market breaks out is a more powerful stock, that is a better buy candidate. So DATP is a better buy candidate, of course, in that regard, and stop is narrow, stop would be just below the squeeze move. Now one thing also I noticed, and whenever we are trading in a non-USA market, that market's currency plays a role. If the currency is weakening, that helps the market, and that is true for the USA market also. For USA market, we use the dollar index. For India market, I look at the USD INR chart. Dollar index was weakening, that is dollar relative to a global basket of currencies is weakening, but that is not helping Indian rupees. Indian rupees is not coming down. If coming down, that is actually strengthening here. That's how the currency pairs work sometimes. If rupee comes down, it's actually getting stronger, but it is not getting stronger. It is moving inside a range, sometimes trying to go to the upside, go to the downside, then coming back to the same trading area. If this pattern continues, then it is also possible that INR will move up. And I shared one analysis in the WhatsApp group for Q India traders looking back many years, that Indian rupee has a tendency to move sideways, go up, move sideways, and if the previous pattern is holding, it may go up again, and this is a longer term weekly interval. And that is one reason I was thinking that if the rupee is weakening, that if it weakens, that may help the market. In any case, the stock I showed, the ATP, that already gave a breakout and flow setup, and I bought that also on Friday. In fact, I will show, some people are saying USA market is overbought. In fact, it is not overbought. USA market has a significant influence on many markets. India is also one of them. They are not fully correlated, of course. But let's look at the USA market now. Let's look at SPY, and I am continuing to use Q Global on Metastock. The beauty of Q Global is you may use it to look at any market, any index, any stock, any commodity, any currency throughout the world. Not only USA market, but any market, any country. SPY. Looks like many of the global markets we saw, isn't it? Not like India market, but okay, I should say like many of the global markets we saw, in the sense it is moving sideways inside a range, and it is at the upper edge of the range. So going by the same consistent approach, I'm not going to be a buyer in SPY. In fact, weekly is also inside a range, right at the upper edge of the range. On top of that, we have a cluster of bearish indecision at the top. There is no reason for me to buy SPY. Notice that this is not like India market where it is moving inside a squeeze. It isn't. So India market, I was still okay to buy, but it is not moving inside a squeeze. It is more likely than not. Anything can happen, but more likely than not, it will come down from here. So as far as SPY is concerned, direction is sideways. My preferred trading direction is actually bearish. But I am hesitating at the same time. Why did I hesitate a bit? That is because of the dollar index chart. And let's look at EUP. This is the ETF equivalent. When I showed the dollar index, I said my view is bearish. The same analysis applies to EUP. Even if it tries to go up, there are too many resistances. I think it is more likely than not that it will fall down. So what does it mean then for SPY? That means even if SPY pulls back little bit when dollar tries to go up, if dollar tries to go up, it is possible that dollar will weaken and SPY will break out to the upside again. And that may give me a swing low buy point. That will probably be a flow trend following long setup, but because I am seeing the weekly is already having bullish backdrop. So a swing low and price going up again will give me a flow long trade setup. I'll wait for that. I'm not going to buying now when I have series of indecisions right at trend line and watermark resistance. Very unambiguous signals, I am applying them. However, I am going to show later that I am okay to buy stocks in the USA market, not the large cap stocks. SPY has many large cap stocks, some mega caps also. QQQ. Also inside a range having watermark at the top in the weekly, at which point the bearish headwind came earlier, which could push price lower by a large percentage. Some of the sellers may still be there. So it is possible that we'll have a false upside breakout coming week. We also have indecision cluster at the top. There is no reason for me to buy QQQ now. Too far away from the recent swing low, whichever point you take it as swing low. it is overbought, shown by the stretch band indicator by too many days for me to buy now, not for QQQ. Dia may tell us something different. No, not really. I'm doing it live, in fact. Dia is also having a trend line resistance, watermark resistance in daily, trend line watermark resistance in weekly, moving inside a range. Right at the upper edge of the range, not inside a squeeze like India market. So it is in a box and my preferred trading direction has to be downward. That means, what does it mean? That means if it goes down next week, I'll be happy to short constituent stocks that are fundamentally weak in weak industries. But if it goes up, it can go up, of course, but if it goes up, I'm not going to be so happy to buy because the low risk entry point will be far away. Will IWM be different? The small cap ETF. It is different. If you remember my last weekend recap, the video is of course there on the YouTube channel. I mentioned last weekend, that was on this day in the market recap. This week was a shorter week for trading, 4 trading days. So this was the last weekend recap day, and I showed, as you can see today also, of course, that IWM gave a proper bullish flow setup 1 week ago. And I mentioned that small caps were underperforming. It is possible that they would start to outperform. They didn't go up much. The IWM went up little bit. The weekly candle shape is actually bullish, and we can see it went up slightly because the activity bar is in green color. So if I took some long positions 1 week ago based on the flow long setup, I have a small profit. Of course, usually, as you know, again, I don't like to buy the average of 2000 stocks as in IWM. I like to drill down using Q index and buy the stronger fundamental stocks in stronger industries. So if I am going to buy now, I would rather buy small cap stocks based on this analysis. If I am looking to short, I may short mega cap, large cap, or industrial stocks. That is how I am interpreting my USA market analysis so far. Now, when I decide to buy or not, I have to look at other dimensions of the market. We just looked at few ETFs, that is what I call external view of the market. But I have multiple ways of looking at the market's internals to see if it is overbought. I don't have time to cover all of them in every market recap, but this is one usually I always look at: market breadth total view, a single chart with many color coded signals, but everything is about market breadth. It's never about one particular stock, not even one index, more broad than that. And that is showing in terms of, let's say, above 50-day moving average percentage. It is bullish, the yellow line, not overbought. 3-month new high low, going up, nearing overbought condition but not overbought yet. What about small cap versus large cap? It was underperforming for a long time, that is small cap. When this line tilts down, the cyan color line, that means small cap is underperforming. Now it is starting to equal perform. If it can break out of this triangle pattern to the upside, then we'll know that small caps are starting to outperform. But at least it is not underperforming anymore. So this is in sync with my external market analysis using the ETFs, that if I want to buy, I would rather buy IWM, the small cap stocks, and this is at least not against that. growth versus value. Growth was outperforming and now it is equal performing value. If it goes up and the small cap versus large cap goes up, that will be optimal for many traders who like to buy small cap growth. I'm okay to buy growth and value both. I'm equally okay to buy small cap, large cap, mid cap. I have no preference so long as I have a Q360 degree setup. So the market is not overbought but bullish. That is what market breadth total view is showing. Every week I don't have time to look at this chart, but this week I came here specifically to look at the Russell 2000 breadth, the small cap breadth. In this layout, you can see the industrials, small cap, Nasdaq 100, S&P 1500, a broader index, and then S&P 500 large caps. They are individual breadths. You will see Russell 2000, that is small caps, is least extended, that is farthest from being overbought in terms of percentage of stocks above 50 MA. That is also supporting my view of buying small caps rather than the others. In fact, if you look at 3-month new high low for industrials, it is hitting the upper extreme. For Nasdaq 100, hitting the upper extreme. For S&P, even 1500 and 500 is hitting the upper extreme. Only for Russell 2000, it is not hitting the upper extreme. And the yellow line, we can see percentage of stocks are 50 MA. Many of them are nearing the upper threshold, but not Russell 2000. So Russell 2000 also having more leeway to the upside. That's how I'm looking at it. It was underperforming, as I mentioned in the last market recap also. It may be outperforming now. But again, I will look at proper 360 degree setup to find trade ideas. Market is not overbought, at least not the small caps. From the external and internal view, let's look at the market from other angles. By the way, I have updated to the latest Windows version, and I'm happy to see, as you can see, that in the latest Windows update, it is not combining all the different Q programs into one single badge. I'm able to see, as you will be able to see if you update to the latest Windows, the different programs. It's easier to navigate between them. Of course, in real life trading, I have multiple monitors. I don't need that, but during webinars, I find it easier now to navigate between the programs. Let's look at the market internal health in terms of sector, industry, stock, advanced decline breadth, 1 month to 1 day. Everything is bullish. Everything is bullish. It is looking like a bit of overbought condition. Looking like, right? Too much of green, between almost 80% to 100% green across all the pie charts. However, the true analysis of overbought condition from QH is shown from the bucket analysis. That is, if the percentage of stocks in the uppermost bucket, which means percentage of stocks above upper Bollinger Band, hits 30 to 40% level. Now it is at only 2.5% level. So yes, it is overbought. That sorry, not over. It's yes, it is bullish. 85% of stocks are above mid Bollinger Band, but very few are above upper Bollinger Band. Above mid Bollinger Band, far below upper Bollinger Band. That is a very bullish condition for the market to buy. And again, we saw from the different index analysis, external view as well as internal view, that Russell 2000 is optimally positioned now to go up. So we may look at small caps. Is the market overbought if I look at technical breadth? Let's see first what technical breadth is saying. That is the balance between bears and bulls. Weekly interval first is bullish, no doubt about it. Across all categories, all signals, strength signals, trend continuation and trend reversal. Everything is bullish for the week. What about Friday? That is also bullish. Reversal is slightly more bearish, but in terms of absolute numbers, it is much smaller than the other categories. So combining strength with reversal, it is in fact continuing to be bullish. Is it overbought? This chart shows that also, this technical breadth, it is not overbought because majority of the bullish signals are coming from stocks that are at price extreme middle. They are not overbought. So when buy setups come from stocks which are not overbought, the market is not overbought. That's how to read this particular chart. So bullish but not overbought in terms of technical breadth as well. We could then try to look at some buy setups. I didn't do it beforehand, doing it live, that is fine. The systems are supposed to be used in real time. What did I do? From that daily technical breadth, I am going to look at the bullish setups. So what workflow am I following? I am doing technical first or bottom up workflow. We can see that I ran Finder on thousands, few thousand, I think 2000 plus stocks, liquid stocks only, and only 136 of them have one or more Q trade setup. 136 is too many to look into right now, but you can see many of them went up by large percentages. They are all possible buy candidates. But I will not look at 136 stocks. Instead, I would like to carry out their fundamental analysis using QVital, and that is the complete workflow. That is the crux of using Q techniques to find buy conditions, buy setups, not only technically but where the fundamentals are strong and stocks in strong industries as well. So let's try to do that. QVital is now retrieving data from Refinitiv, sending request to Refinitiv to retrieve data about these stocks. Let us give it a few seconds to get the data. All the stocks are up. That was expected because I chose the stocks that had a possible buy setup. Let's look at the stock scorecard. Because part of the market is overbought. In fact, in my view, small caps are the areas to buy. I'm not going to be so restrictive as to start with diamonds or 3-star. Let me be bit more flexible, start with 1-star only. That will also give stocks that are fundamentally strong. In what way? Either in terms of valuation, undervalued, or condition, not and, or in terms of earnings growth in the last quarter. So we see many stocks. How many? From 100 something it came to, you can see here, 71. Am I going to look at 71 stocks? No. Remember, the third dimension, I'm doing bottom up. So technical, fundamental, then industry score. I want to only look at those of these 71 stocks that are in strong industries. So one single click, I'm going to look up their industry scorecard from QH. And I am going to, for this session, look at only the industries that are in the top 20% of all industries based on their score on Friday, or top 20% of accelerating industries. Let me choose those also. Okay. So I am now left with the industries of those stocks that are fundamentally strong. Let me look at stocks restricting to these industries only. From 71, now I am left with only 27. So what did I do? I looked at technical setups first, and what did I do before that? I looked at the market, externals, internal, sector, industry, stock breadth, bucket analysis, and technical breadth analysis to decide what is my preferred trading direction. Preferred trading direction, I decided to be bullish. It's possible to do that at present. Market is not overbought. So I looked at buy setup starting with Q Finder, looked at their fundamentals, only focused on fundamentally strong stocks, then looked up their industry scorecard, only focused on the strongest industries, top 20%, or most accelerating industries, top 20%, and then came to the stocks again, only 27. Now, using a single click, let's look at their trade setups. See how I'm seamlessly, easily navigating between the different programs that are totally integrated. So I'm left with 27 stocks now. They have one or more trade setup. Let's look at the ones that have at least two possible trade setups. What are they? HQY, S, and IQV. What are the setups? Flow and breakout. What does it remind me of? The stock that I bought in the Indian market. That also had a flow as well as breakout setup. So let's look at them. We have to look at the charts to confirm if the entry point is low risk. IQV, you may read the ticker symbol from the top here. Here, IQV. It has a breakout technically from trendline resistance. It has a flow setup, but it is already at upper boundary, too overbought for me. I would not like to buy here. That's what I meant for confirming if the entry point is low risk from the chart. So I ignored that. S. Sentinel. This one is a viable stock. It is also a breakout candidate. It is also having a flow setup. What is different in this stock S from the previous stock is that it is coming out from a narrow range. So here the stop could be just below one of these direction lines. I would not like to buy it on Friday at the close, but on Monday if it continues to go up, I would not mind buying it, putting a stop based on closing, not based on intraday move in this case, but based on closing below somewhere here. But let's see if I have a better stock in the buy list than this. This one, great. So let me go back and delete this one. Unambiguous, isn't it? I just looked at it in 1 second and decided that technically HQY Health Equity Incorporation is a better setup because here I have a clear breakout with a bullish flow setup also, and here the stop is unambiguously narrow, just below this recent swing low. Here the stop is very unambiguously narrow, so that's why instantly I prefer this one. Now if I did that, let me look at this stock using weekly daily to confirm the setup fully, and just so that TradeStation users don't feel bad, I move to Q Elite on TradeStation to look at the stock HQY. And now I see the value of the Q setups that have checklist conditions on weekly also. The weekly backdrop is in fact magenta, so it does not confirm a flow setup. However, it still confirms a breakout setup. So it is still a buy HQY. Okay, let me make a note of that. And now let's go back to the Q Vital and look at the complete scorecard. We already know it is one star candidate, but let's look at this one page scorecard now to see that yes, it is one star, but what else can we see from the fundamental scorecard? Fetching data from Refinitiv. While it is retrieving peer data, let's look at the industry again, because this is the point where we are finally deciding to buy or not. We know it is one of the strongest or most accelerating industries. The score is quite high. And if I look at the industry rotation, that's great. It is not only one of the top 20% in terms of strength, it's also one of the top 20% in terms of acceleration over the week. We don't have to have acceleration over Friday if we have very strong strength. It is one of the other. It is good to have acceleration over 5 days as well. Managed healthcare. Industry, healthcare sector stock. You can see that also from here. Healthcare was weaker earlier. So the stock sectors, industries that outperform for a period, they may underperform later and vice versa. Coming back to the stock scorecard, now Refinitiv retrieved all the data. We can see it is high earnings growth stock, high growth stock. Analysts are bullish if you pay attention to that. Company makes money, and we saw from QH it is one of the top 20% strongest industries relative to other industries, top 20%. And here from Vital we see in itself also the industry is very strong on Friday. 81% of peer stocks went up. That's very strong industry. See the beauty of the Q systems. If we looked at just SPY, QQQ, DIA, you would think it is overbought, you would not like to buy. But when we do the complete analysis, there are in fact several stocks to buy. HQY is only one. There are other stocks to buy, either in terms of valuation or growth or dividend, maybe sometimes combining multiple strengths in terms of fundamentals in strong industries with proper technical setup. I looked at only few of the 360 degrees candidates, only 3, and I chose IQV as one. But there are many more candidate stocks which are in fundamentally which are fundamentally strong in strong industries with proper trade setup. All you need to do, I need to do is to look at them on the charts finally to see if they have low risk entry points like IQV. Sorry, not IQV. Highlighting the wrong one. HQY, right? HQY. HQY has. So I will not spend time on them. You may look at them. I'll usually avoid looking at the stocks that already went up by 13 to 19%. The stops will be far, that we know already from the percentage move on Friday, but there are many other stocks to look at to look for buying opportunities. That's how unambiguously I carry out the analysis in global markets, India market specifically, and also in the USA market. We are at 1 hour point. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. That will most likely be next weekend. I'll announce the date time on X as usual. Have a great weekend, and as I always say, as these live sessions show, there is no reason not to do that. Trade profitably. Thank you.